Hello, what's up traders? It's Clarkson Trades. In today's video, I'm doing a complete breakdown on how to identify market trend, how to draw a trend line, and how to trade trend line. So stay tuned to the end of this video. And if you're coming across my channel for the first time, take out some time to smash the subscribe button and don't forget to on your notification icon. So if I drop a new content like this, YouTube is going to notify you. Also, do well to follow me for more tips on forex trading. Let's go.
First of all, I would like us to start with the definition of a trend line. A trend line is a diagonal line drawn on the chart mainly to show us the direction of the market. And we have mainly an uptrend line and a downtrend line. So how do you draw a trend line? First thing you do is when you come on the chart, you have to identify if the market is in an uptrend, a downtrend, or a consolidation. That's the first thing you need to identify, because if you can identify the trend of the market, it's going to help you to know how to draw a trend line if you are drawing an uptrend, a downtrend, or if it's a consolidation. So for more understanding, I'm just going to give us a textbook structure of how an uptrend looks like, how a downtrend looks like, and how a consolidation looks like. So an uptrend is characterized by a series of higher highs and higher lows, meaning that what you see that the price of that particular currency pair is increasing or the market is going up, signifying that there are more buyers in the market at that time, or bulls in the market. You can see a bullish market, and these are simple terms that traders use that you might not understand as a beginner. If you hear something like a bullish market, it means that the market is in an uptrend. And if you come on that type of a market and you want to draw your trend line, you need to draw an uptrend line. So it looks like this. This is a bullish market or an uptrend. You see market constantly pushing to the upside. For example, we have this example here. You can see we have this low, we have this high, low, high, low, high, low, high. So the market does not move in a straight line. If you're thinking that the market will just move like this in a straight line, then you have it all wrong. The market always moves in the form of a wave. So you have a low, you have a high, like this. You have a low, you have a high, you have a low here, you have a high, you have a lower low, higher high, lower low, higher high, just like that in an uptrend. So it's easy to identify an uptrend. All you have to do is just look at the market with your naked eyes. If you cannot identify the trend of the market with your naked eyes, it means that that market is consolidating. Looking at this market, you see that prices are pushing up. Prices are pushing up, showing us that this is an uptrend. So this is just a practical example of an uptrend, and this is how the structure looks like. Secondly, we have a downtrend where the market gives us series of lower low, lower high, lower, just like this, and is characterized by falling prices. You see the market will constantly pushing to the downside, or you can say there are bears or sellers in the market. So if let's go to a practical example of a downtrend. I think GBP is currently in a downtrend. Let's see. All right. Okay. Now this is an example of a downtrend, GBP. What do you see? You see that prices are pushing downward. Prices are going down like this. The market is pushing down, or the chart is shrinking down. I'm just saying this for beginners. We call this candles. Candlesticks are going down, and you see more of bear candles than bull candles. And the overall direction of the market is going to the downside. This is called a downtrend, characterized by a series of lower highs, lower low, lower highs, lower low, just like that. So this is a downtrend. And an example of a consolidation is when you cannot identify the trend of the market. For example, For example, let's look at this part here. Let's take this off. Now look at this section here. You see that you cannot identify the trend of this particular market. Let's try a pair. Let me see. AUD USD, I think is it has been consolidating. Let me check. All right, this is an uptrend. You see that just with your naked eyes, you can identify the trend of the market. This is an uptrend. The market is what pushing to the upside, is going up, giving us series of lower high, lower high, higher high, lower high, higher high, low high, just like that. So this is an uptrend. Let's look at USD CHF. Trying to find a consolidating market where you cannot identify if the market is in an uptrend or the market is in a downtrend. Now look at this market condition. Look at this market condition. You see that the market is consolidating in a particular range. This is called a ranging market, where you cannot identify if the market is in an uptrend or the market is in a downtrend. This is called a ranging market. So these are the three main market conditions or structures we have when you come on the chart. An uptrend, the market is pushing to the upside. There are buyers in the market, bulls in the market, pushing prices up. We have a downtrend, bears in the market or sellers in the market pushing prices down, and we have a consolidation. So just looking at the chart with your naked eyes, you can tell if the chart is going up, is coming down, or is stuck in a particular range. This is the first thing you need to identify when you come on your chart, and it is going to help you to know if your trend line should be a downtrend or an uptrend line. So like I said, a trend line is simply a line drawn on the chart, a diagonal line drawn on the chart. Either it slopes up for an uptrend or it slopes down for a downtrend, and it helps us to identify the direction of the market. It also helps us to identify key points of interest for us to be able to take trade on particular scenarios. And there are some traders that trade purely trend line, and that's their trading strategy. They wait for the market to get to that trend line, or you can call it area of interest, where they execute their trade. So you can trade trend line as a strategy. Trend line also helps us to know if the market is about to change trend, because if I draw a trend line on a higher time frame like the 4 hours time frame or the 1 hour time or the daily time frame, and the market hit that trend line, break it and retest, then I know that the market is about to change trend, and I'll show us a practical scenario of where the market breaks our trend line and the market change trend instantly. So trend line helps us a lot as technical traders to one, determine areas of interest of a chart, determine the direction of the market, show us possible entries, where to take trade, where to stay out of the market. So let's dive into how to draw a trend line. Now to draw a trend line, you need to come on your toolbar like you have it here on your left hand. The second we have this is it. You can see there, touch this dot, this arrow. You can see the trend line. The first two we have trend line. Now once you click on this trend line, you'll be able to use the tool. Are you seeing this? You'll be able to use the tool. Now let me just give us key points of drawing a trend line. The first thing that you have to do is that your trend line must have at least 2 touches. Meaning that what? If you are drawing a down trend line, you must touch at least 2 peaks or 2 highs. For example, this is a down trend line because what do we see? We see that currently this market is pushing to the downside. It's going to the downside like we see. This is the direction of the market currently. So how do we draw a trend line in this case? First thing or first rule of a trend line is that a trend line must have two touches. So you can have something here like this should be the first touch on this is a peak, right? We can see a high. This is a high here, this is a high here, and this is also a high here. So if your trend line can be able to have to touch at least two of those highs, is a good trend line. So that's the first way of drawing a trend line. You can put it on one high and drag it to the second high to connect those two touch points. Just like that, we have a very good trend line there. Now, from this trend line, it can simply tell you the direction of this market, that the market is actually bearish, or the market is actually selling or moving to the downside, or they are bears in the market pushing prices downward. In forex, we trade direction of the market. So the main importance of this trend line, after telling you the direction of the market, is to know where to take trade. It also helps to know where to take trade because it shows you key points of interest. Why? The market has reacted to this trend line the first time, this is the second time, and this is probably the third time. This is the third time this market is currently reacting to this trend line. This is a third touch. And what do you know about trend line? The purpose of trend line is that if the market is selling, for example, like this, the market is in a downtrend. If the market should reverse to touch your trend line, you are either going to have a bounce of that trend line or a break of that trend line. That's the two golden rules you need to know about trend line. Now, this for this example, let's consider this as our first touch. Consider this as the second touch. It bounces off, and let's consider this as the third touch, like what we are seeing here. Let's consider this one as the third touch, like what we are seeing here. Now, logically, what we are expecting is that first, the market should bounce off this trend line like it has done in the past, like it has done here the first time and the second time. The market should bounce off this level and sell off. So if you're trading this type of market, when the market gets to your trend line, it gives you a confluence. You start looking for candlestick confirmations to take a sell trade. You start looking for candlesticks like we have the shooting star, we have bearish engulfing. These are just candlesticks that confirms that sellers can get into the market. You start looking for a shift of structure or rejection of that trend line. So logically, the trend line helps us because if should the price get back to our trend line, we know that we should have a potential sale opportunity. So what we are expecting to happen is for this market at this point to bounce off this trend line and sell to the downside. For experienced traders, you can say we have something here like a double bottom and we have a double bottom pattern. We have a neckline here that the market can bounce off, go back. But for simplicity, we are expecting the market to what bounce off this trend line and sell. It's easy as that. It's easy as that. Now that is the first scenario, and for you to really know that the market will bounce off that trend line, you need to go down to a lower time frame and look at candlestick behaviors or candlestick pattern or reversal pattern in the market. If you don't know about reversal pattern, I'm going to do a video to explain how to identify reversal candlesticks, how to identify shift of structure. So when the market gets to your trend line, the first thing to look out for is a bounce, which is what is more likely to happen. Like this, we are expecting a sell from here. And secondly, if the market does not bounce off that trend line, you probably get a break. So let's say we have this here. Let's take this off. Now we have this here. This is just a scenario like this. What has happened here? We have this touch on this trend line. If the market does not bounce off this trend line to sell, what will happen is either going to break it. If it does not bounce off that trend line to continue in the direction of its trend, which is selling, to continue in the original direction, is going to break that trend line to the upside. And once the market breaks this trend line to the upside, you have one confluence that the market is about to change trend from a downtrend to an uptrend. That's one importance of a trend line. If the market breaks that trend line, especially in higher time frames like the 1 day time frame, the 4 hours time frame, the 1 hour time frame, then you are more likely to know that the market is about to change trend, and you can actually look for what buying opportunities. If it's a downtrend, the market is more likely to what change trend to an uptrend, and you can look for what buying opportunities. There are various ways to get into the market if the market breaks your trend line. Some people trade and what and wait for a retest. We call it a retest. The market will pull back to touch that trend line. Then they can now take what an entry long, to go long or to buy that currency. Something like this. You cannot have what an entry to buy this currency. Now, why are they buying? Normally, the market was in a downtrend, so they are supposed to sell, but now they are buying. Why are they buying? Because the market has break that trend line. You retested the trend line, and that's a very good confluence to tell you that the market what has changed trend in most cases, especially if it's a trend line drawn on a higher time frame. So this is just one of the importance of having a trend line on your chart and drawing a trend and knowing how to draw that trend line, because you might not know how to draw a trend line and the market reacted to your trend line you drawn, which is not good, and you feel that the market is about to change trend. Meanwhile, your trend line was not just good enough. So to draw a trend line, you must make sure that the trend line is touching the peaks. If it's a downtrend, sloping downward, touching the peaks, and it must have at least two touches like this. You have the first touch here, we have the second touch here, and the market again is touching our trend line for the third time here. So two things are possible. It's either we get what is sell from them, which is more likely to happen because that is a trend line rule, number one. If you don't get a sell from there, you probably get a break of this trend line, and I'll immediately change my bias from a sell to a buy. Once the market can break that trend line, I'll wait for a retest to what buy. So this is an example for a down trend. Let's go now to an uptrend. The same rule applies. How to draw it: must touch at least two low points, and the trend in the market should break the trend, is going to what is going to say, and the market should bounce off, is going to buy. The rules are all the same. The only difference is the direction of the trend. If the market is in an uptrend, the direction is different. The uptrend line slopes upward like this, touching what the troughs or the lows, something like this. An uptrend has a structure like this. So once you're able to have at least two touches, then you are good. You have a good trend line, something like this. And a down trend line has slopes downward, touching at least 2 points, like this. Once you're able to get at least two touches, you are good, like this. So this is just a textbook example on how to draw a trend line, either an uptrend like this or a down trend. So the example we have seen now was in a downtrend. Let's go now to an uptrend to see how an uptrend line really work. It's the same rule, same way to draw it, but just that an uptrend line slopes upward, touching at least two troughs, or you can say touching at least two low of the market. Now, if you zoom this market, you see that we have a low here, we have a low here, you have a low and you have a low here, meaning that what the market was originally in a downtrend, but the market might be shifting structure to the upside. So we can also have an uptrend here, something like this. We have a low here, 2, 3, and 4. So you can have something like this, touching the lows, connecting at least 2 points. If you can get at least 2 points, you are okay. Your trend line is good. At least 2 points, your trend line is good. Here we have how many touches? We have 1, we have 2, we have 3, and we have 4. So the logic behind trend line is simple. If this market should sell to the downside, which is more likely to sell because you have seen that it has touched a trend line, a downward trend line, it should bounce off this trend line here and continue its movement to the upside. So this is just the logic of trend line. If the market should sell and touch back our trend line, it's going to bounce off, and you can potentially look for a buy trade somewhere around this trend line. You can look for a buy trade somewhere around this trend line. You can buy from here, you can buy from here, you can buy from here, and you can buy from here. But most of the times you don't know when the market is going to touch the second time. So you can have the first touch, the second touch, but the third touch you should know, because once you have two touches, you can have a trend line and you can wait for the third touch. So let's say you have first touch, second touch, this is a third touch, and you can likely wait price here to buy, and you can see market bounce off this level, and it bought, came back, bounced off for the fourth time, and what happened? It what bought to the upside. So this is the simple logic behind trend line, and from this you can easily spot good trading opportunities. If the market should break this trend line, let's say for example the market sells and breaks this trend line, what is going to happen? Just simply wait for a retest. It's going to come back to touch it. You can call it a retest. It's going to touch it to continue to the downside. So this is a simple logic of drawing trend line and the idea behind trend line. So if this market should sell and breaks this trend line, I will know that the market is more likely to change direction from being an uptrend to a downtrend. So I'll be looking for selling opportunities. Once the market has break that trend line and close bullish and bearish, I will know that the market is about to change direction. So what will I do? I will start looking for selling opportunities. It's simple as that. If the market bounce off, I'll look for buying. If it breaks, I'll look for selling. So that's the simple logic behind trend line, and it's very easy to draw trend line. Once you're able to connect two touch points, it's very easy. One thing you need to know about trend line is that you can draw trend line on all time frames. It works on all time frame. The 1 day, 1 week, 1 month, 1 hour, 4 hours, 30 minutes, 15 minutes, 5 minutes, based on the type of trader you are. A scalper will draw his trend line on a 5 minute or on a 15 minutes chart. A day trader on a 30 minutes, 1 hour, 4 hours, 1 day. So trend line works on all time frame. It depends the type of trader you are and the time frame that you use to analyze the market. But you need to know that the higher the time frame, the more stronger the trend line. The higher the time frame, the more stronger the trend line. So I want to just do a practical example. An example, like I said, if the trend line breaks, is more likely to retest and continue to go in the opposite direction. So here we see that we have a high here, we have a high here. So we can connect these two highs with a downtrend line like this, touching the peaks, touching the peaks. Yes. Now let's go now to a lower time frame. Now you can see that what happened? The market touched this trend line the first time here. You can see the first, second, the third around here. And what happened? The market break this trend line. Look at this behavior here. Look at this behavior. Now what happened here? You can see that the market actually what break this trend line to the upside. It did not bounce off like what we're expecting to happen. It did not bounce from on the trend line, but it break that trend line to the upside. And what happened? What happened? Break to the upside, telling you that you should not sell. The market is about to change trend from a downtrend to an uptrend. Came back to what? Retest the trend line, or to touch back the trend line. It's called break and retest. So once it breaks that trend line, it simply tells you that the market is about to change trend. So you should change your bias from a sell bias to a buy bias. So after breaking, came back to retest and you have this bullish or buys from here. So this is just an example of what I've been saying, that if the market is in a downtrend like this and it breaks above a trend line, it will retest and continue to the upside like this. So if you have a trend line here, if you have a trend line here, the market breaks this trend line, breaks, come back to retest like here, and what we have this push to the upside. So this is just the logic behind trend line. But had it been the market did not break this trend line, would have what look forward selling opportunities. Had it been the market did not break the trend line like what we have here, what we have here, would have looked forward selling opportunities. So that's the simple logic behind trend line and how to trade trend line. You either trade a bounce, which is more likely to happen, or if the market should break above your trend line, change your bias. Should break below, change your bias. The next thing you need to know about trend line is that the higher the time frame, the stronger the trend line. If I draw a trend line on a 1 day time frame, it's very strong, and the market will be more likely to respect that trend line on a higher time frame than on a lower time frame. So if I draw a trend line on this is a 1 day time frame, a trend line like this, the market is more likely to respect this trend line than on a 4 hours time frame and than on a 1 hour time frame. So the higher the time frame, the stronger the trend line, the stronger the trend line, and trend line works on all time frame based on the type of trader you are. So these are just examples of what you need to know about trend line. First, I'll do a recap. First, you have at least 2 touches. Second, an up trend line slopes upward while a down trend line slopes downward. Thirdly, the more the touches, the stronger the trend. From experience, if you have been trading or if you keep on trading, you realize that the third touch is always the strongest touch. If the market should touch the trend line for the third time, if you have drawn your trend line and you have 2 touches, the third touch is always the strongest touch most at times, and the more they touch, the stronger the trend line. But above 5 touch, you start having a weak trend, and the market might likely break that trend line and go to the opposite direction. So trend line also works on all time frame, be the 1 minute time frame, the 4 hours, 1 day, 30 minutes, 5 minutes. It works on all time frames. And the logic behind trend line is that if the market should get to your trend line, you can have a point of interest either to sell or to buy. So thank you for staying to the end of this video. I hope that this video really helped you out. Please, if it helps you out, don't forget to subscribe to this channel for us to be able to grow, and you to be also be able to recommend this channel to more traders. And also would like this video and comment your thoughts on this video. If you have anything that you want me to do a video on, as far as forex is concerned, comment your thoughts on this video. So do well to follow me on all my social media platforms. See you in the next video. Thank you.